we have about 10 minutes left for questions. I'm going to ask Steve, while we're asking for questions, I'm going to ask Steve if he has any additional thoughts.
Sandeep, the programs that you had gone through, I have worked with a number of financial institutions in my role here as a strategist at Harland Clarke, and unequivocally, my experience has been that they're all very effective programs and are helping financial institutions really get more lift out of their loan to deposit or loan to share ratios. So financial institutions are finding value in each of the programs that you've gone through.
Okay, great. Al or the operator?
Back to you.
Yeah, hey, that was great, Sandeep and Steve. Thank you. Very, very good stuff here. All right, so we've got a lot of questions coming across here. So let me go ahead and let's see. I'm going to go ahead and read out the question just so that we all hear what the question is, and then we can go from there. So let's see. The first question that we have here is the West Coast Bank that we mentioned, the results with HAARP. What was the asset size of that bank, and what was the acquisition cost per mortgage, if you can share that?
They have over 200 branches, so I don't have the exact number with me, but I'm going to say they're about $20 billion in asset size. The marketing cost per loan was high. I don't recall the specific number since this was, pure prospecting. But the way we calculated ROI is this client, makes post-underwriting costs, post-sales commissions, post-marketing costs, what have you. They make about 105 basis points on each loan, and that's how we calculated that of the $45 million in loans, they netted $500,000, a little over $500,000 in net income. So that was the ROI calculation. So that number is net of the marketing spend.
Okay. Great. Okay. Let's see. We've got another question here. I think this relates back to the shopper alert solution. What entices the member to respond for you to get a 7% rate? Response rate, I think, is what we're asking here.
Yeah, that's a great question. The enticement here is the offer is timely while they're considering a competitive offer. They have an existing relationship with your institution. So a lot of what we hear is, when the phone calls are made, it's an expression of gratitude from the members saying, hey, I didn't know my credit union did mortgages. I didn't know my credit union did a credit card. So I'm thankful for the call, and yes, I am interested in applying and seeing if I can get a better or comparable rate than what I have now. So timing is critical, and the existing loyalty and brand recognition that you have with the member or customer is also helps.
Right. Okay. So obviously timing. I mean, we're taking a lot of the guesswork out of targeting and selecting members that are actively shopping versus those who may be thinking about a loan but may not be in process yet. Okay. Great answer. Okay, we've got another question here, kind of a general question about HAARP 2.0. Are you seeing much activity in this space? Steve, maybe that's a good one for you to answer. If I can put you on the spot.
Yeah, thank you, Al. Yeah, we are seeing some activity, and it is really, I would say, very geographical in nature. A lot of it is dependent upon those particular market areas where we've seen significant impact on local home prices. So while it may not be applicable to all geographies, there are some areas in the country where we've seen lots of interest in HAARP and lots of activity.
Okay.
Yeah, I would say the opportunities perhaps weren't as great as last year, but there's still, a sizable population out there that is HAARP eligible that has not taken advantage of the product.
Right. Yes, that's very true. So let's see. Let's keep moving here. We've got a lot of questions coming across here. This question relates to channels. So we have here, the question says, have you seen a better response rate by using telemarketing or direct mail, in parentheses, targeting existing members? Seems as if a telephone call would result in a higher rate due to quick timing. Great question. I'm going to answer this from from a solution standpoint, within Shopper Alert. Because this is credit bureau data-based, meaning where the source of this information is credit bureaus, there are certain obligations the marketer has to fulfill. For those of you who have done pre-approved marketing, you have to provide opt-out, you have to use certain disclosures, disclaimers, what have you. And our recommendation is the direct mail piece is a requirement to deliver and comply with the FCRA. And once we do that, the phone call then is a courtesy follow-up, is a nice, friendly call where, and you may or may not talk about the mail piece. It's a very easy conversation. If the mail piece does not go out, then to comply with FCRA, the marketer has to read a fairly detailed script that goes into how the opt-out process works, how we obtain their name, the details of their offer. Basically, all the 8-point font print that's on the letter has to be read on the phone call, and it makes for a fairly awkward conversation, as you can imagine. That's why the most effective way we have found is the direct mailer goes out, fulfills compliance. You're going to get some traffic from the direct mail alone. And then the follow-up phone call, hopefully same day, further increases the overall response. Okay. That's great. Thanks, Sandeep. Okay, here we've got another question. I think we've got enough time for a couple more. So here's the next question. This relates to mortgage and home equity lending. So the loan strategy that we discussed here, the question is this typically done, is it a one-time campaign, or is this a campaign that you'd recommend that it should be done 3 to 4 times per year, for example? Yep, another great question. We recommend at a minimum quarterly. So sometimes we're reaching the same prospects, other times we're reaching different prospects, but we always recommend an ongoing effort where we're modifying our segmentation, our targeting models, introducing new offers if you're able to. So for loan recapture programs, it's an ongoing calendar-based solution where every quarter you have a product. Now, you don't have to market all loan products in the same month. One month we could market auto, the following month it could be mortgage, another month it could be home equity, but certainly we would recommend this to be an ongoing campaign. Steve, would you like to add to that?
Yeah, and if it is the home equity loan program that you were talking about earlier, in some cases, depending upon where the customer or the member falls within the segmentation, the communication could be once every 6 months or so, depending upon where they fall in their borrowing patterns. Or as Sandeep says, it could be a minimum of quarterly, sometimes even every other month. We've got a question about Shopper Alert, the 30-day look-back report. How much is that?
If you mean the cost, there is no fee to do that. We would do it at no charge to demonstrate the total opportunities you have. And really what we're hoping to come out of that is we're making that investment to help you make a business case within your institution to show your executives and your management, what the size of the opportunity you're missing out on. So we would do that at no charge. Here's another great question. It says here we find that most members are buying on the spot.
You indicated timing is a critical factor. How are you selecting the timing of the calls and contacts?
This may be referring to auto loans in particular. When somebody, over the weekend is going shopping and buy a new car. Yes, we do see some members, customers that have already closed their loan, but we also have a number of cases where they're open to refinancing right away. And there's also people who may shop for a car but not buy right away. So we haven't found from a return on investment standpoint that has hurt us in any way, and the auto loans still deliver a pretty strong ROI.
And also, if I could, Sandeep, what we're also finding is that those indirect loans, obviously we know sometimes that consumer walks off the dealer lot with what may not necessarily be the best rate. And so that reach out to the indirect loan customer can be very effective and much appreciated by the member or the customer, because it's the opportunity to get a better rate and literally refi that car they walked off the lot with as a new car in order to take advantage of a better rate.
Sure. Here's a question about HELOC. What carrot is there to encourage HELOC borrowers to increase draws as described in the demand generation portion?
That's a great question. I mean, initially, we're not recommending any type of special offer for a couple of reasons. One, we want to establish that there is a need for a special offer before we diminish profitability. The second reason is a lot of our clients, not all, but a lot of our clients are unable to manage offers within their systems. They may be using some third-party software that does not allow for flexibility in setting up special offers. So really the carrot is we're reaching out to these segments with a very specific message, with a set frequency, and that alone we have seen acts as a significant stimulus to increase usage. And over time, we expect that we may need to do special offers like rate discounts, et cetera. But at this point, it's all about analytically determining the segmentation and creating a message that's relevant to that segment.
Okay, great, thank you. All right, we've got another question. This one's pretty straightforward. The 30-day look-back analysis and report, is there a cost to that? What is the cost? What is the price to that?
There is no cost to that at this point. In the future, we may have a charge, but at this point, we're not charging. And really, what we want to do is encourage our clients to help us evaluate their opportunity, and then help them build a business case that they can take to their executives, marketing managers for funding. So we think it's a great way to demonstrate what the opportunity is, the missed opportunity. So we're happy to do that at no cost.
Okay, great. Here's a question for Steve, going back to the beginning of the presentation. Steve, when you were talking about the state of the industry and the data that you were reviewing, do you believe this data varies by region?
The data that I showed, by varying degrees, will vary, obviously, but for the most part, all regions are reporting increased demand for auto, increased demand for mortgages. Okay, great.
Okay, let's see here. Boy, you've got a bunch of questions here. Again, if we do not get to your question, I will be sure to follow up with you via email in the next few days to get you a response. This is a great question, I think. This relates to Shopper Alert, I think. So if consumers are shopping online for credit, right, for a loan, Direct mail alone is not going to have much of an impact. That's part of the question. That's the first piece. The second part of that question is how quickly would emails deploy?
Steve, do you want me to answer that?
Go ahead, Sandy, take it.
Yeah, the direct mail goes out same day we receive the trigger. The phone calls, get made, the first attempt is made same day. It may take us another day or so to actually speak with the consumer live. The way we look at this is because of the firm offer requirements, the direct mail piece serves as a vehicle to deliver all the legal components, and we're going to have response activity coming out of the letter alone. And then the phone call is a courtesy reminder, very easy call. It doesn't have to go into any of the details or restrictions of the offer, and really the objective is to try and offer to take an application on the phone. If we don't have the direct mail piece, then it makes the phone call awkward because all of the legal disclosures have to be delivered on the phone. On the email side, again, the deployment happens quickly because of the lower cost of the email. What we would recommend is doing a 7-day reminder, sending the first email right away, but doing a 7-day reminder, maybe a 14-day reminder, so it's always top of mind.
Okay, great. Okay, here's another question, and it relates to HARCO. Are you seeing much HARCO lending activity or programs these days?
Steve, are you familiar with that?
Yeah, the HAARP lending, really, it will vary by region, of course, depending upon the impact that falling home prices have had. In some areas, we're finding where prices have held relatively steady and the consumer has maintained equity in their balances, in their mortgages. We don't see as much HAARP activity as in some other areas where prices may have dropped by a greater degree. So it will vary from region to region.
Okay. All right, here's another question about response rates. It relates to that 7% response rate that we were talking about with Shopper Alert. Any ideas why that's so high? What is it that drives such a high response rate?
A couple of things. One, we're serving a consumer that is in need. They're actively shopping. They've raised their hand and they've said, I am in the market, for a loan, and we're reaching them in a very, very timely manner. The second thing is with your existing account holders, you have affinity, you have brand recognition, which helps, at least them wanting to consider your offer before they make a final decision.
And Sandeep, if I could just weigh in on that also, studies tell us and experience tells us that when you reach out to your account holders, members or customers, with a way for them to make money, save money, make their lives more convenient, they are all over that approach and are very appreciative of the financial institution reaching out to them.
Okay, great. Thank you, Steve. All right, we've got another question about, I think it does relate to Shopper Alert and trigger-based programs and creative messaging. And this is kind of an interesting question. They're essentially asking about what the message, what you should communicate since it's a trigger program and we know they're shopping for a loan. Do you want to say, hey, we know you're shopping for a loan? I mean, what is the best way to approach that without really, I guess, scaring the customer into thinking we're Big Brother or something? I don't know.
Yeah,
interesting question.
Yeah, that's a great question. We do not allow specific content in the letters that indicate that we are aware of their shopping activity. We don't think that's best practices. So what the letter would say, would look like a traditional pre-approval message that tells them that they're credit qualified, they have an offer, the rate term associated with the offer, and then have a strong call to action to encourage them to respond and apply. And basically, it's just in their minds, in the consumer minds, it'll look like a coincidence that, in terms of timing. We don't think it's good practice to overtly portray that we're aware that they're shopping. And the phone script works the same way. We basically are calling to remind them that their credit union or bank has great loan products, great interest rates, an easy process, and we're happy to help them on the phone.
Okay, great, thank you. Okay, I've got another question, Sandy. Maybe this is probably best for you. This relates to Shopper Alert and the Lookback report. The question is, would the report filter out any trigger that was initiated by our FI, i.e., we have 50% of our members looking for auto loans, but we pulled credit for 60% of the members that are applying?
That's a great question. The way we would ask for that is when we receive your initial account holder file, if you're able to exclude those account holders where you've taken an application, within 30 days, so we would screen them out on the front end. The credit bureaus do not share with us who the inquiring lender is for obvious reasons. They are protective of that information. They don't want to have a situation that allows, one bank or credit union to actively market another bank or credit union's triggers. So that's a great question. What we find is we've done some back-end analysis, and we find, less than 10%, maybe more like 7 or 8%, are applications within their institution. So vast majority is happening externally.
Okay. All right. Okay, let's move on to our next question. And you know what, Steve, I'll put you on the hook for this one. I think this is a really good question, and a good question for someone like you that has been an SVP in a bank and has worked with these issues. So the question here is, to paraphrase a bit, working in a marketing department, aside from incentives, how can I assist our employees in promoting our products and services, including loans, credit cards, and so forth? So good question, very good question.
Yeah, great question. Thank you, Alan, and thank you for whoever asked. I'll share with you, in a former life, any marketing promotions that I was involved with, we would work very closely with retail to make sure that retail was fully aware of everything that marketing was doing, was apprised of any direct mail pieces, any advertising, anything that we were doing to promote a particular product. And then we would work hand in hand with retail to set branch goals. So, for example, if it were credit cards that we were promoting, we would work with retail and set targets for each particular branch to meet in order to help us reach our overall goal. And then we would work with the branches on a weekly basis to help them understand where they were relative to progress toward reaching that particular goal. So we didn't necessarily have to incent every particular employee in the branch, but when all was said and done at the end of the day, maybe something as simple as pizza for the branch on the marketing department would usually go a long way toward helping people to ensure that the promotions were successful and that the organization met its overall goals.
Okay, fantastic. All right, one last question since we're over time. This is a question about channels. Do you find that using email and telemarketing is that much more effective, I guess is what they're asking, than just direct mail?
Absolutely.
Yeah. Sandy, do you want me to take that one, or do you want to handle it?
Go ahead.
So, a couple of studies that I saw recently, one from the Direct Marketing Association, another one from Epsilon Technologies, point out that direct mail, postal mail, that stuff that we get in our tin box at the end of our driveways is still very effective. Consumers appreciate it. Consumers trust it. Consumers act on it. It carries a lot of weight with the consumer when they get postal mail, and they like getting postal mail from firms with whom they're doing business. Email is very effective, but primarily as a complement to direct mail, a complement to the postal mail that ends up in our mailboxes. So what we find to be the most effective way to utilize the two channels, communicate via postal mail, replicate that communication via email, complementing everything, echoing the call to action, providing an appropriate link to the bank or credit union's website where the consumer can act on whatever it is we want them to do. InfoTrends, I believe, did a study last year and found that an email complement to a direct postal mail piece carries about a 28% lift on the call to action.
Great. That's great information, Steve. That's fantastic. It's great to put numbers to that because I think intuitively all of us as marketers understand multi-channel is better. It's a question of how much better. So that's really good information. Okay, well, we are way over time here, so I want to go ahead and wrap this up.
Okay, and I'm sorry, we do have a fun question. Did you want to
Oh, we do. I'm sorry. Yeah. Let's go ahead.
We'll hear from Ellie Heckle.
Hi.
Hi, Ellie.
How are you?
Doing great. Doing
good.
Thanks for coming.
Well, you kind of answered my question a little bit. It was about we're having some challenges with making sure employees are excited about sharing the promotions with our members, and I guess to help us fulfill our overall goals, what were some ways that we could, like aside from incentives, like what are some ways we could get the employees excited about current promotions and upcoming promotions?
Right. Yeah, that's right. That's always a challenge. I think in any business, especially in banking, where you're engaging people, talking to them about complex financial products at times, right? Mm-hmm. You're talking about money, so it can be a difficult conversation. And our frontline employees, first just getting people to do that is difficult, and then given the nature of financial services, it's even harder. So, I think that's a great question, and I think we talked a little bit about that. Right,
so basically keeping them informed of all the promotions so that they're more aware of all the details, that way they can be more aware of what the promotions are, what they entail, so that they can be more educated to share with members.
Yeah, sure.
Yeah, exactly.
And Ellie,
that's a big piece of it. So I'm sorry, Steve.
No, I was going to say, Ellie, in that same vein, it's again, for example, I'll use the credit card promotion. We're starting a credit card promotion. It's going out on March 1. Mm-hmm. So leading into that date, you may want to, standard operating procedure in my former life was 10 days before the promotion would start, we would make sure that we got in front of the retail group, got in front of all the branches, walked through the promotion. What did it entail? What was going to be, what comprised the marketing pieces that our account holder base was going to see. Mm-hmm. As we got a little bit closer to the promotion, it was working with the branches to help them come up with scripts that they could help to convey to the account holder what the promotion was, but even more importantly, what the benefits of the product were that we were promoting. What are the benefits of our credit card? What makes our credit card different from anybody else's credit card? Why should you have that credit card from me versus another financial institution? Mm-hmm. Maybe a week or so into the promotion, we'd come back at it again and conduct objection clinics. Okay, so from a branch standpoint, at point of sale, mm-hmm. What are you hearing from your account holders? What kind of pushback are you getting? Why are they telling you that they are not necessarily interested in opening up that credit card that we're promoting? And using those objection clinics to come up with responses so that as they do come up in the future, our retail staff has a better way to overcome that objection and help to sell the particular product.
Wonderful.
So those are some things that I've done in the past. Ellie, feel free if you'd like to reach out to me after this meeting, and I have a whole quiver full of things that from a former life may be able to help you.
That would be great.
Okay.
Yeah, that was great, Steve. You know, Ellie, one other thing comes to mind too, which is mystery shopping. I don't know if you've ever used it before. It's something we do here, but you know, not to be a commercial for our services, but mystery shopping is used a lot in banking and retail. So, you know, what it is a person walks into your bank and conducts some kind of a transaction, and then that shopper, that mystery shopper, gathers information about that experience. So they would be able to tell you, for example, let's say you do training like Steve discussed, is, you know, they would come back and tell you on a real structured basis, you know, exactly what happened. Hey, I was presented a credit card offer, or I kind of primed up auto loans and I got a response, or I didn't. And the great thing about mystery shopping, it's not so much to check on your employees, but it's, if you use it as part of your training program to kind of get feedback and add those metrics and measure it, it really gives you a great understanding of the amount of selling that you're doing in your bank at the branch. So that's another thing to consider. But that's a great question.
Great, thank you very much.
Fantastic question. Yeah, thank you. Thank you for attending. Okay, you know, with that, we're going to wrap it up. We are way over time, which is not a bad thing, but we do want to be respectful and mindful of your time. So, again, this is Al Fontova, Senior Manager here at Harland Clarke Marketing Services. I want to thank all of you for attending and sitting in with us today. We really do appreciate the opportunity to talk to you, and I hope that you found this really helpful. I think it was a great presentation. Thank you, Steve and Sandeep. You guys did a great job. And then as one final reminder, remember we will send out an email to you following up this webcast in the next couple of days. In that email, you'll find links to be able to download the presentation and recordings, you know, in case you want to do that. So, again, thank you. We appreciate your time, and I hope you have a great rest of the day here. Bye-bye.